Our first guest this evening has been warning the alarm bell about our economy and the looming recession for months on this program, on his podcast. He's told you it was coming, it was coming, it was coming. Chief economist, co-founder of Schiff Sovereign and global strategist, Peter Schiff, back on the program. We don't like saying the phrase, "We told you so," folks, but Peter's been here telling you so for a long time. Peter, why did it happen now? You've been saying it was going to happen sooner rather than later. Here it is.
Well, the bad news is it's not over.
Right.
But one of the catalysts was the jobs report, the horrible jobs report that came out on Friday. But you're right to be suspicious of that 4.3% unemployment number, because what they don't report is something that they call U6. And the U6 rate jumped up to 7.8%. Now, the difference between U6 and U3 is that it counts people who are working part-time but who want to work full-time, and it also counts people who are discouraged and are no longer looking because they can't find a job. Now, up until 1994, that was the only number they reported. So all the numbers before 1994 were U6. And I checked, and for the 52 years between 1994 and 1942, those 52 years, there wasn't a single year where the unemployment rate was higher than it is right now under Biden. So it is a lie that we have low unemployment. We have high unemployment.
Right.
And we also have high inflation. We have a misery index that would make Carter blush, and it's going to get worse.
Yeah. That's funny you brought up his name. He just said on Friday he's endorsing Kamala. Can't wait to vote for her. Oh, Jimmy.
Yeah,
Just,
well, I don't know if I wouldn't want his endorsement. That's not going to help. It's like, yeah, you want to repeat the Carter years, vote for Kamala.
Yeah. Anybody old enough to remember the gas lines?
Yeah. Trump should use that endorsement in his ads.
Crazy. What happened with trading, too? I keep seeing all these posts this morning when I woke up about the 6 trading platforms that were down and how institutions could do trades, but the regular folks couldn't. What was going on when all this crash started and people knew that hell was coming? What happened with regular investors versus the big trading companies? Who was allowed to do what? Because I'm seeing a lot of controversy online, Peter.
Yeah, well, it seemed like the markets opened on the lows, and maybe some of the retail investors, who got out market on open didn't really get good fills during the day because we rallied back. But I think that's a bearish sign. We didn't wash anybody out. And in fact, the odds of a September 50 basis point rate cut shot up to nearly 100% now. And there are people talking 75. They're looking for 3 cuts by the end of the year. So that's propping up the markets. Mm-hmm. But they just don't understand that when the Fed does cut rates, and they're going to do it, it's not going to help. And in fact, I think long-term interest rates are actually going to start to rise when the Fed starts to cut. And that's going to put more upward pressure on inflation. And then what's going to happen is the Fed is going to launch quantitative easing again to try to stop long-term interest rates from rising by printing more money and buying more bonds. And that's going to send already high inflation through the roof. So we're going to get the worst of both worlds, a severe recession and high inflation.
Wow. Well, we know your answer for a lot of these things, but I'll ask it again. In this market, so volatile, what do we need to be doing from now until, well, I'd say February of next year, till we see if someone new gets in the White House and makes immediate change that could affect this economy in the way of energy, and we know which guy that'll be. But until then, it's going to be hold on to your you-know-what and your cash and your gold, right? What do we do, Peter?
Yeah, well, they threw a lot of babies out with the bathwater in today's sell-off. So a lot of things that shouldn't have gone down went down. So it was a great opportunity in the gold and silver mining stocks. They got beat up pretty big. Many of the gold stocks hit 52-week highs on Friday, and now they're way below. So it's another opportunity to buy those stocks. A lot of defensive names, including the energy, consumer defensive, the tobacco names, a lot of defensive high dividend paying stocks also got hit. And I think that's a great buying opportunity because you can't just be in cash because cash is going to get destroyed through inflation. What you don't want to own is all these momentum stocks these tech names that are trading at nosebleed valuations that really don't pay dividends, they're going to suffer in a high inflation environment. But there are a lot of quality companies that you can own. Most of them happen to be outside the United States, but that can provide a solid defense against an erosion of the value of money, which is what inflation is. And that's the path that we're headed.
Yeah. What's your inside scoop on why Buffett pulled all that stock out of Apple? What's the deal there? Because I know a lot of folks out there, probably our viewers, own Apple, own Tesla, own a lot of tech stocks, and they really got crushed. What's the deal there?
Well, he's a value-oriented guy. He knows that stocks are expensive, so he probably wants to pare his positions back and maybe give the new team that's ultimately going to run the company after he's gone, give him a fresh slate, give him a bunch of cash to go on a shopping spree to pick up the bargains that he knows are coming. Now, the question is he going to sit? Is Berkshire going to hold on to all that cash, or is he going to do something smarter, like maybe put it into gold? I remember at one point he had a position. He took a big position in silver. I remember he wrote a report a long time ago where he talked about the United States as Squanderville, and he called U.S. dollars squander bucks. He knows that the government creates inflation, and he knows they're going to create a lot more inflation. So I don't think that he wants to just sit with a pile of cash and watch the Fed inflate it away. So we'll see if Buffett moves some of that cash into real money, which might be gold. And holding a lot of gold will put his company in an even better position to buy bargains down the road than if he has to go shopping with depreciated U.S. dollars.
All right, so we'll see when and if the Fed drops the rate. Obviously, next month's job reports, if it sucks again, that will hurt investors' outlook. So keep your phone on, keep vibrator on. We're going to be having you on speed dial, Peter, over the next few weeks or months, I have a feeling. Not for good things, but we need your expertise. Peter Schiff, global strategist and chief economist, as always. We appreciate your insight, brother. Take care.
Thanks a lot, Dan.
Yep.